Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Market momentum accelerated for the Australian dollar and now into its 9-day stretch out of 8. We can see that the bulls are still maintaining or at least challenging the top side and pushing the RSI into extreme overbought conditions. Along with that, we do have a strong trend from the ADX. However, as the market challenges that top side around 67.85, and also as we can see a key point if we go back in time around April and then late May, we can see that there's been good supply from this region, and I do anticipate again, due to the overbought conditions that is, and therefore see a rejection from 67.85 and back towards 67.20, or even lower down towards 66.65.75. The euro was also whipsawed overnight after data showed the US inflation had cooled in May, which has potentially cemented bets that the US Federal Reserve may pause rates at its conclusion of its two-day policy meeting on Wednesday. According to the US Labor Department report, the Consumer Price Index rose 0.1% last month, following a 0.4% jump in April, putting the annual rate now at 4%, with the core inflation unchanged at 0.4%. Also this week, we've got the European Central Bank's rate decision, which widely expects an interest rate hike of 25 basis points, and again in July, before pausing for likely to the rest of this year. Looking at the technicals, we can see here the market is still struggling towards that top side, and with a cap around 108 figure 35, could see a rejection from there. The dollar index, which measures the greenback strength against a basket of 6 major currencies, still holds above 103. Any pullback looks or views the support level around 107.35 to 106.65 to 75. So let's see if the Fed does pause at its June meeting. The dollar yen was stronger after taking a brief look to the downside, found initial support again from 138.65.80, and from the rejection posts a weak engulfing candle that could see further momentum, and that is on towards the region of 141 to 142. In light of the pattern, the bulls are still governing the move and therefore could see a further gain. Sterling was a little bit whipsawed overnight after the market's data of the UK Labour report that ignited much more hawkish talk to the Bank of England, keeping their rate hikes longer. The unemployment rate fell to 3.8 from February to April, with both employment levels and wage growth experienced significant increases. As the Bank of England continues to battle high inflation that peaked around 11.1% in October last year, it now currently retreats back to 8.7, which is still high. So therefore, with the numbers coming out from the labour market, may keep or at least anywhere between 25 to 50 point rate hike in the next meeting. Looking at the technicals, up towards that top side around 126 figure 20, like previously, the market was very hesitant and rejected, and therefore could see a pullback, which I do anticipate due to the bearish divergence, and therefore look towards 125.65 as minor and down to 125 figure 15. Spot gold was weaker overnight, as we can see on another engulfing candle, which is the second one in the last few days, and with the technicals negative and the ADX also supporting a bear trend, now waits for that confirmation. Now a close under 1,942 would confirm the bearish engulfing candles and therefore see a move down towards 1,928 to 1,916.18, with any upside limited, with an ADX trend into a bear case does put further pressure on the downside. Wrapping up with oil, well, the market rebounded, and from there now looks away from that $65 handle, but nevertheless we still need a little bit more confirmation to that upside, as the technicals haven't fully broken to support a reversal that includes a bullish rally. But instead, until we see a clearance around 69.5 to 69.80, the market may actually turn back to the downside. So it is a little bit mixed at these current levels, but until we get a little bit more confirmation to the bull case from the rebound, the bears still have the overall view that a further slide may come into play towards 67, and as I mentioned, the base hold around $65 a barrel. Well, that's a wrap for today. Thank you very much for joining me. And as always, look out for the interest rate report, and I hope you enjoy the day ahead.